Safety is the first criteria of many investors, but growth often happens when you step out of your comfort zone. Hi everyone, I am Anjal. In today's video, we are going to discuss one of our flagship strategies, that is Special Fund. We have with us Karan, who handles product at Green Portfolio, to discuss everything about this fund. So Karan, starting with the basics, what is the fund philosophy and how do you invest in this fund?
So, unlike a lot of other funds, Special Fund is a multi-cap strategy where we are heavily skewed towards the mid-cap space with some allocations to the large and small cap space as well.
So this allocation mix, it seems very interesting, right? So why specifically mid-cap space?
So, if you look at the data for the last 20 years, an interesting thing comes out. Mid caps have actually been the real winners, right? Thing with large caps is that they are fundamentally strong companies growing consistently, but from time to time they undergo time correction at an index level. With small caps, these are very small companies, aggressive companies, and also come with higher volatility. And between cycles, there is a heavy value correction that we see from time to time, be it different cycles, including the very recent one. Mid caps, on the other hand, have been the most outperforming class of stocks. If you look at the last 20 years, the longer the time horizon, the higher the percentage of mid caps outperforming all other classes, right? So that is why we're heavily skewed towards mid caps, and because we have to have a broader approach to the overall portfolio, we are also allocating some large and some small caps.
Okay, so Karan, from what I understand, large caps are subject to time correction, but small caps are subject to valuation correction, hence the higher allocation to mid cap space. But since it's a multi cap strategy, you must be having a large universe of stocks to select from, right? So, how do you scout these opportunities?
So that is the interesting part. We have a research team of CAs and CFAs who are not only monitoring these companies but are also regularly holding up management meetings as well as doing factory visits. Specifically coming to the management, we are very heavily indexed on what quality of promoter is running the show because that can make or break the company that we invest in, right? So that is one of the criteria as well.
Karan, coming back to the same question, the multi cap strategy, right? You are not the first PMS, and I'm sure you won't be the last PMS doing so. So, what makes you different from the other funds that are available in the market?
So you're absolutely right. There are a lot of options available, especially in the mutual fund space. But as is the case with most of them, they are investing in more than 50 stocks at any one point in time, where we feel it is very difficult to create an alpha at least over a medium term. What we are doing differently is that our allocation does not go beyond a 20 to 25 stocks level, and this is well diversified over 7 to 8 sectors in the portfolio. Moreover, in a PMS setup, unlike a mutual fund setup, we are much more agile in rotating capital in and out of stocks. Mutual funds, because of the sheer size of the capital that they are managing, it becomes very difficult. Liquidity is a challenge. That affects everything from the kind of opportunity that a PMS can invest in to how fast we can move in and out of stocks. So all of that matters.
Okay. And what type of companies do you have in this portfolio?
The broader criteria while selecting stocks is growth at right price. That means that we are going for companies which exhibit all characteristics of a quality stock, such as high levels of promoter integrity, good growth prospects, good industry tailwinds, without overpaying on the valuations front.
So, Karan, what type of investor would benefit the most from this fund?
It'll be ideal for investors who have a moderate risk appetite and have a clear goal of consistent returns over a 3 to 5 year period.
A multi cap strategy comes with its own risk and return characteristics, right? So, how do you mitigate the risk in this fund?
So, managing risk is one of our top priorities, and we're doing this in two ways. The first way is that we are investing across 7 to 8 sectors, ensuring that we are not over indexed in any one sector in case there is a headwind in any particular sectors. Secondly, we are dividing our investment into multiple tranches. That means the investment does not happen in one single go, it is divided into multiple tranches or phases. Same thing happens with our exits as well, right? Whenever we're exiting a stock, we will divide the exit into multiple tranches and take that call.
Coming to the most important question, do you take NRI investments in this fund?
Yeah, so the fund is open to all NRI investments. There are two routes an NRI can choose to invest in a PMS, the NRE route as well as the NRO route. Both are open.
Are there any entry or exit loads associated with this strategy?
No, there are no entry loads or exit loads in this strategy.
And how do you ensure that my funds are in safe hands?
Good question. For that, we need to understand how a PMS structure works. In a PMS, the portfolio manager's job is not to keep custody of your funds. We are only here to give the buy sell trades of what to buy, when to buy, how much of it to buy, right? The custody of funds is actually kept with the custodian in place. So SEBI has stipulated a custodian structure in India. There are 12 total SEBI regulated custodians available in India, and we are partnered with three of them.
You're associated with three custodians. Who are those three custodians?
So we are partnered with ICICI, which is a household name. We are partnered with Novama as well as Orbis.
Thank you, Karan, for joining us today. I hope that we have answered almost all the questions of investors.